Now let's turn our attention over to the disruptors. George Sillis is with us, senior markets correspondent. Today's company is ARM Holdings. Bank of America raising the price target on the shares. We get the details from George Sillis. Details.
Yeah, Nicole, I mean, if you look at what's going on, obviously the semiconductors have been a great performing industry group this year. And if you look at the breakdown of what ARM Holdings does, essentially they're licensed design software technology for semiconductors that is used in mobile applications, but also in computing across multiple industry groups. You name it, it's mobile phones, it's desktops, it's industrial automotive space, and of course artificial intelligence has really been the catalyst for this particular name, especially as its IPO presented itself to the market back in September of 2023. But overall, the trend has been positive for ARM Holdings, and their licensed technology is basically used in over 70% of the total world's population uses some sort of ARM technology. And I think if you look at what's been going on with Qualcomm, which is a mainstay competitor of ARM, these two companies have actually done extremely well in the past year because of their CPU technologies, which are blended or binded with mobile application and, of course, communication chips. So they're very power efficient technologies. And I think that's, again, why we're seeing some strong trends in these names. Now, looking at the stock, it's actually performed quite well. And Bank of America sees still some promising growth. Considering last quarter when the company reported earnings, they guided for licensed revenue in 2025 to grow by 40%. With earnings to grow about 55% for the full year. And so Bank of America is making an adjustment to their models, increasing their price target to 180 from 160, and they do maintain a buy rating on ARM.
Yeah, understood. So they keep this buy rating. They raise the price target. It's at 157 today, down slightly. Tell us about an example trade here.
Yeah, so it's a good thing to point out. First off, if you look at the price action today, it's down, and we've actually seen the market narrow even further. The past few weeks, obviously, there's been concentration of movers like Broadcom and NVIDIA. You'll notice those two stocks are higher today, but some of the periphery AI names, the second tier names, let's call it, like ARM Holdings, even Marvell Technology, AMD, just giving you a few examples of some of the losers today. So I think with that said, if you look at ARM, going into 2025, it's still trading at quite a high multiple, around 100 times earnings, and even in 26, 77 times. So what I'm going to do is I'm going to play conservative here because implied volatility is still very rich in these options, and I'm going to sell a July cash secured put. So what we're going to do is sell the July 145 cash secured put, and that's, of course, below the current price, but you can earn about $7 a share or $700 a contract if you sell that. So effectively, the delta on that option is 30. So it has basically a 30% probability that the option will expire in the money for the buyer, and that's effectively where we lose money. But the yield of $7 is about almost 5% in the next 28 days. And the break even, if you do get assigned shares at 145, is all the way down to 137. That's a $20 move lower before break even, which is about 13%. So it's really structured in terms of holding price going higher, but also the stock could pull back all the way to 145 and you'd still make full profit of $7 a share.
All right. Thank you for that. We appreciate it. George Sillis, great to see you, and a good look there at ARM today.